Good afternoon, everyone, and welcome to our last leg of our e-commerce webinar trilogy. We'll wait another minute to kick off uh, for late joiners to join. Okay, let's start. Welcome to the last leg of our webinar trilogy on e-commerce. On Tuesday, we discussed the e-commerce rules in the EU and the practical issues that arise under the current legislation, specifically with respect to the transfer of stock between member states in the framework of e-commerce trade. On Wednesday, we spoke about the EU and UK rules in relation to the importation of goods. And today we'll be speaking about the position and the rules relating to trading platforms in the EU. Today's speakers are my colleagues from the Netherlands, Bart Matthijssen and Rendel Hofman, who will introduce you to the rules, the current rules, and the future rules that are on the horizon. Before we kick off with our in-depth analysis of the current rules, I propose we have a quick poll to set the scene and see who are the attendees and what their position is. So if we could activate the poll on what the situation is, whether you're a platform user, a platform operator, or a payment service provider, so that we, as speakers, can see who is at the other side of the table. Okay, quite a diverse group. Predominantly platform users, as well as people or parties that advise clients on how to work with platforms. With that known, I give the word to the platform to my colleague Bart Matthijssen, who will introduce you to the current rules of platforms.
Yeah, thank you, Peter, for the introduction, and welcome everyone to this webinar about the EU rules for platform trading. I think we all deal with platforms as a customer, as a supplier, as an owner, or as tax advisors of one of these parties. And the rise of platforms is certainly not unnoticed in the tax area. Platforms will be more and more confronted with tax liabilities and also with record keeping and data sharing obligations. And all these new rules have created a bit of uncertainty in the market for both platform owners as platform users. So I think enough reason to discuss the existing rules for platforms in EU VET, which I will do. And my colleague Randall will take you through some relevant upcoming new rules for platforms. In law and literature, there are different names for a platform. We know the online marketplace, we know the electronic interface, but basically the essential thing is that a digital platform intervenes between a supplier on the one side and a customer on the other side. And that all happens online. And when trading via or acting as a digital platform, the first step from a VET perspective is that you should determine the qualification of the platform. And the VET qualification of the platform, it depends on the contractual agreements. First of all, a platform can act as an intermediary or a disclosed agent. And in this case, the platform is acting in name and on behalf of another person. And as a result, the platform arranges for a contract between the supplier and the customer. And that means that the platform does not qualify as the supplier of the underlying transaction, but receives a service fee for bringing the supplier and the customer together. And the service fee can be charged to the supplier, to the customer, or to both. Platforms that are acting in their own name, but on behalf of another person, they take part in the supply. And the platform shall be deemed, in that case, to have received and supplied the transaction itself. And in that case, the platform acts as a commissioner or a disclosed agent. And in this case, it is likely that the supplier does not know the customer of the transaction. So how does this theoretical background work out in e-commerce? The e-commerce sector is first of all characterized by suppliers that are selling goods online via a digital platform. And the thing is that the platform prefers to act as an intermediary rather than a commissioner when they bring suppliers and customers together. Because as a result, the platform is not responsible for various obligations that arise from the sale of the goods, such as licenses, quality requirements, liabilities, and also VAT. So what platforms generally do is they create terms and conditions that qualify them as an intermediary, so that they are only providing a service fee. And that means that the supplier will be responsible for the obligations arising from the main transaction. So when selling goods via a digital platform, it's important as supplier to determine the status of your customer. And a key indicator is whether the customer has provided a valid EU VAT number. Also, other indications can be relevant, such as the legal form and whether the customer has a registered office. But from a practical point of view, the supplier can assume that the customer is not a business if he does not provide a valid VAT number. And in that way, you can determine whether your customer is a business or a consumer. Then, as you all know, since 1 July 2021, the EU VAT rules for B2C business sales have changed significantly, and the VAT consequences of the new OSS rules have already been discussed during the first and the second webinar, I guess. So, in short, since 1 July 2021, the VAT on B2C business sales in the EU is due in the country of the customer. Suppliers are able to submit one OSS return in the country of the OSS registration. There are no distance sale thresholds applicable anymore unless the sales remain under the 10,000 euro. Note that this threshold is not applicable for non-EU suppliers. The VAT exemption for low-value goods below 22 euros has also been abolished, which resulted in the introduction of the IOSS. And last but not least, facilitating platforms may be considered to be a deemed supplier. Moving forward, I will, of course, only focus on the new OSS system when trading via a digital platform. As said, digital platforms qualify as a commissioner if they act in their own name and on behalf of the supplier. And the fact that the platform shall be deemed to receive the goods and supply the goods to the customer himself makes him a bit of a distributor. For the transaction between the supplier and the platform, the VAT rules for regular B2B supplies are applicable. And this may result in interesting intra-community VAT questions. However, this is a different area of VAT, which we will not discuss today. And the same is applying to the second transaction in case the customer is also a business. This will also result in intra-community B2B questions, which is out of the scope of this webinar. On the other hand, the supply from the platform to a consumer result in a B2C supply, and therefore falls perfectly within the scope of the new OSS system. But yeah, this is just a standard B2C supply, and as will become clear, it's more interesting to discuss the platform in an intermediary function. So as discussed, digital platforms qualify as an intermediary if they act in name and on behalf of the supplier. And in the example, we have a customer that places an order on a platform, and the sale will take place between the supplier and the customer. The platform only provides a service fee to the supplier. And in the first situation, that's the situation below, there is a regular B2C distance sale by the supplier to the customer. If the goods will be shipped from the Netherlands to Austria, the supplier is liable for Austrian VAT and will probably use the OSS to declare and pay this VAT. It can, however, also be the case that the platform has a warehouse in Germany, and this may have some overlap with the first webinar about warehousing and stock movement, but it's good to understand how platforms, in this case, make agreements with these suppliers. And a good example is in this situation is how Amazon works with their fulfillment centers. So if the supplier allows Amazon to transfer their goods from the one warehouse to another and between their warehouses, the service fee of Amazon will usually be lower. But the thing is that the ownership of the goods remains at the supplier, which means the supplier needs additional VAT registrations in the EU in every country where a warehouse or fulfillment center is located. And in this case, it will result in an obligation for a VAT registration in Germany to report the acquisition of the goods in Germany. So that's a good thing to be aware of when trading via platforms. Then there is also the service fee from the platform to the supplier, but that's just a regular B2B service for which the VAT will be reversely charged to the supplier. So the transfer of goods here between fulfillment center of platforms is a point of attention, but things become even more difficult if the platform that acts as an intermediary will be regarded as a deemed supplier. And first, I would like to discuss the background of this deemed supplier rule. The purpose of this deemed supplier rule is to ensure an effective and efficient VAT collection. And the amount of platforms is, of course, much lower than the amount of suppliers. So it is easier to collect the VAT from the platforms. And the deemed supplier rule, therefore, reduces the administrative burden for suppliers, for tax authorities, and for consumers. The question is, of course, whether the burdens are fairly shared in this case. This deemed supplier rule has two conditions. The goods must be, there must be a sale of goods via an electronic interface, and the platform must facilitate the supply of the goods. And the characteristics of such a facilitating platform are that it connects the supplier and the customer for the sale of goods, and also the facilitating platform should directly or indirectly determine the general terms and conditions of the supply, as well as he is involved in the payment, the order, and the delivery of the sale of the goods. And if we then talk about a platform who facilitates, then we have a platform that shall be deemed to have received and supplied the goods himself. And this deemed supplier rule only applies in two situations. The first situation is that the platform facilitates distance sales of goods from non-EU countries with an intrinsic value of less than 150 euros. And an example is showed in the picture. If a supplier from the Netherlands sells goods from a non-EU country via in this case, German platform to a customer in Austria, then the deemed supplier rule applies. Of course, if the value of the goods is below 150 euros. The supply from the Dutch supplier to the platform qualifies as a B2B supply, and this supply falls outside the scope of VAT. Then the second supply is a B2C supply from the German platform to the Austrian customer. And in the course of this supply, the goods must also be imported. If the platform would like to use the IOSS registration in Germany, which can be applied in this case, he should apply for this IOSS registration, in which case he will get an IOSS number. The IOSS number can be communicated or should be communicated with the logistic partner, which will report this number on the import declaration, and then an import VAT exemption is applicable on the import of the goods in Austria. And besides that, the platform should also submit in the IOSS return that VAT in Austria have to be paid. So that all happens in Germany. In the German IOSS return, there will be a distance sale from Germany. There will be a distance sale to Austria, including Austrian VAT, and this VAT will be paid to the Austrian tax authorities. Then on the next slide, we see another example of a platform that qualifies as a deemed supplier because it facilitates distance sales of goods imported from non-EU countries with a value below 150 euros. The only difference is that the platform is now established outside the EU. And the first supply between the supplier in the Netherlands and the non-EU platform falls again outside the scope of VAT. There is still a distance sale of goods to Austria, and the goods must be imported in Austria. But the difference is that the platform now needs an EU intermediary or an EU representative that pays the VAT via on behalf of the platform. So an EU platform can apply for an IOSS registration itself, but if it concerns a platform outside the EU, then it should appoint an EU representative in order to make use of this IOSS system. Yeah, what if IOSS will not be applied? Then there are two options. The customer pays the import VAT, which is of course not very customer friendly. And the second option is the standard procedure where the platform needs to apply for a VAT registration in Austria in order to declare the import VAT. Then the second situation on which the deemed supplier rule is applicable is that the platform facilitates a distance sale within the EU by a non-EU supplier. And an example is that the goods from a non-EU supplier are located in Germany, and the goods will be sold to an Austrian customer again. The non-EU supplier will most likely have a VAT registration in Germany, as the goods must have been reported in Germany upon the arrival of the goods in Germany. And subsequently, the non-EU supplier, because the platform deemed supplier rule applies, the non-EU supplier has a B2B supply in Germany to the platform. This supply is VAT exempt with a right of deduction, and whether and how this local transaction should be reported in the German VAT return, that depends on national VAT law. In some countries, for example, the Netherlands, these transactions, these zero-rated or VAT-exempt transactions, should be reported in a specific box of the VAT return. But this depends in every country on the national VAT rules. Then the supply from the platform to the customer qualifies as a B2C supply, on which Austrian VAT is due, and the platform can easily report this transaction via his OSS registration in Germany. Yeah, on the next slide, we see another example of a platform qualifying as a deemed supplier because he facilitates the distance sales of goods in the EU that are sold by a non-EU supplier. And the platform is in this situation established outside the EU. This has no impact on the application of the deemed supplier rule. So whether or not the platform is established in the EU or outside the EU, the deemed supplier rule is still applicable because the supplier of this transaction is established outside the EU, and the goods are already located inside the EU and will be sold to an EU consumer. The non-EU supplier will still have a local B2B supply in Germany, similar to the previous example. It is exempt from VAT. And again, the platform is making a distance sales from Germany to the Austrian customer and is liable for Austrian VAT. The difference here is that the non-EU platform can register for the OSS in each EU country where the goods are supplied from. So in the previous example, the platform was established in Germany, so it should use the OSS registration in Germany. But if there is a non-EU platform, this platform can register for the OSS in every country where it supplies the goods from. And I think in the first webinar, it was already discussed under which circumstances non-EU companies can register for the OSS in the EU. So that was the deemed supplier rule. And that brings us to the last slide with some references to administrative obligations, which is a small bridge to the presentation of Randall about other record-keeping obligations for platforms. The administrative obligations for platforms being a deemed supplier differ a little bit from the obligations for platforms that are not a deemed supplier. So in short, platforms not being a deemed supplier should keep records of the supplies they facilitate. And I refer to Article 242 of the VET Directive and Article 54 of the VET regulation. And platforms that are qualifying as a deemed supplier should keep records like a normal supplier. The only difference is that if such deemed supplier makes use of a special scheme, for example, the OSS or the IOSS, then there are rules implemented in the VET regulation. And if such special scheme is not used, then the national VET legislation of the relevant EU country is applicable to the administrative obligations for the deemed supplier. Yeah, then I would like to end my presentation with some final and practical points to keep in mind. It is good to be aware of the fact that each platform has different terms and conditions, so it's very important to assess them preferably before you start trading via a platform. Then the quality of the data is also very important, and the bigger platforms, they provide clear warehouse and sales reports that can be used for the reporting of your sales and transfers of your goods. However, these reports do not have always have the same layout. So it is therefore important that you know how to process this data, how to book these warehouse transfers and sales in your ERP system, and how to take care and prepare a correct VAT returns. And of course, we from Grow are always available to help you with this. I would like to thank you for your attention, and I think it's time to switch to Randall.
Thank you, Bart. I think we have one poll question in between, don't we?
We have indeed one poll question, and that's a funny one because it will see whether I explain the rules for deemed suppliers clear. So the second poll is the rules for platforms and deemed suppliers are clear to me. True and a relief, true and a hassle, not true of I thought they were clear before this session.
Yeah, I think the answers are quite similar to the first session. New OSS rules, including the platform rules, are kind of a hassle to both, of course, suppliers, users, but also for us as VT advisors. And some people think that it was clear, but it's not anymore after this session. I'm not sure if the next session will make it any more clear. What I do know is that there will be more rules for platforms and for payment service providers. Because the next session will be about the new rules that we will have from the 1st of January 2023 and 1st of January 2024. So these new rules, Bart discussed already that there is a lot of administration to be done by platforms, and these rules will add even more administration. It's all about mandatory exchange of information and administrative cooperation. Of course, e-commerce is quite new. It's difficult for authorities to follow each transaction and to follow the payments, but they still want to. Because in general, in the EU, we are missing out of 130 billion euros of VAT each year. And with these kind of new rules, we will try to cover that gap, the VAT gap. In general, these rules are not to tax a certain tax, but they are to find where the gap is from a VAT perspective and maybe even for an income tax perspective. What I saw from the first poll is that there are no platforms and no PSPs in this webinar. Maybe they will view the replay that is available later. So I will make it as clear as possible, because of course the information that is exchanged needs to come from the suppliers and the users of the platforms. So again, it is based, or it is a rule, obligatory rule for platforms and payment service providers, but it will affect the users of those platforms. These rules will be implemented in local law, so they may change a little bit from the directives that they come from. Again, what Bart said, there is a low overlap with VAT and administrative rules from the VAT directive, but the VAT directive mostly focuses on transactions, whereas these two rules focus on the platforms and the service providers itself, so not on the transactions. Of course, transaction information is needed, but it focuses on the platforms. If we look at the timeline, then DAC 7 already has begun. From the 1st of January 2023, the rules should have been implemented in local rules. If you look at the users of the platforms, the providers, the sellers on the platforms, and the sellers that are already on the platform in 2023, you have some time to do the due diligence, because you only have to report in 2025. But for new users, for new sellers, the reporting should be done in 2024 already. So that means that as a platform, you need to have the information available during this year. So you should do your due diligence already this year. It's all about revenue, business information of the users and the providers on such platform. As mentioned, this is mostly administratively. So again, you need a lot of information to share with the local authorities. On the next slide, we will see some definitions. It's quite a broad definition, because it wants to trace every transaction or every platform transaction. A platform is any software. It includes a website, but also an app, and it is a platform that should connect a seller with a user for a relevant activity, and we will see what a relevant activity is later. It also means that a platform can do directly or indirectly. What Bart mentions as a little bit as a deemed supply, commissionary or agent, undisclosed, disclosed, etc. It should all be covered by DAC 7. It may also cover internal transactions within a group. So if a group operates a website and member firms of that group sell via that website, it may also be touched by DAC 7. Not in every situation, but it may. So what is a seller under DAC 7? That is a platform user who is registered at any moment. In principle, it should be a seller, because it should carry out a relevant activity. And again, we will see later what a relevant activity is. It's mainly EU sellers for goods and services, so sellers that are established in the EU, but for real estate, it has a close nexus, of course, with the member state where the real estate is situated. So that also means that information of sellers that are non-EU sellers may be handed over to the tax authorities in that specific country. A member state will automatically exchange the information with another member state, and if a seller is involved in another member state, that information will be shared with that member state. But if it applies to immovable property, the information will be shared with the country in which the immovable property is situated. In most cases, the information should be kept for 10 years. So the tax authorities will have a lot of information on transactions via platforms. There are some exceptions, and please note that especially for the last exceptions, less than 30 irrelevant activities, local rules may mean that you even have to report if you do less than 30 relevant transactions. So the local flavor is very important. So what are the relevant transactions? And I think we discussed some of them already. It's the general sale of goods. So a lot of platforms are affected by this rule. It's a rental of a movable property, and it's services that are directly done between a seller and a user. The good thing about DAX 7 is that you only have to register if you do relevant transactions and if you have to report in one member state. It's kind of a one-stop shop, what we see with OSS. Of course, a relevant transaction is only a relevant activity if it is done for a compensation in any form, and the amount is known by the platform. So those are the basic rules and the basics for DAX 7 reporting. If we then look at the reporting obligation, it's quite broad. So you need to do a due diligence on your platform. You provide a lot of information on the platform itself. You have to do the due diligence on your seller. So if we look at the audience today, most of them are not platform owners or operators. Then the platform will ask you for this information, so the due diligence seller part. But it will also ask you for your financial and factual data. I would assume that if you interact with a platform as a seller, most of this information is already available at the platform. But please be aware that, especially now, they may ask you for additional information because they have to provide it to the local tax authorities. Please also be aware that you may have questions from local tax authorities because they see that you do transactions that cover their member state. If a seller does not provide information within 60 days, the platform should close down the account and also withhold payments. If a platform does not apply, you have 2 reminders for that, then the registration of such platform is revoked. Please also note that refunds should also be mentioned as a relevant transaction. That's part of the reporting obligations. So if there is a refund done on a former transaction, that refund should also be reported to the local authorities. So, in short, the scope of DAX 7 is not always clear-cut. It has a broad range because tax authorities want to see what happens and, of course, want to tax every transaction that they do not tax at the moment. There is an overlap with the VT directive, but again, the VT directive touches the transaction, whereas DAX 7 wants information from the platform on anything that is happening on that platform. This year and the coming year, you have to do your due diligence, and for sellers or users of the platforms, please be aware that the platform will ask you a lot of questions to be able to hand over that information to the local tax authorities. And again, you may receive questions from local tax authorities on your transactions in the other countries. That basically covers the DAX 7 part. We also have one other new directive, and that's CSAP. CSAP is mainly based on the payment service provider directive. So it follows a lot of the items from the payment service directive number 2. but again, it may be more broad, and we'll see some of those examples later on. The new rules will come into force on the 1st January of 2024. But again, you have to do your due diligence as payment service provider already in this year. First reporting deadline is the end of April, and the tax authorities have to submit the information to the other authorities some days later, 10 days later. This rule mainly, or this new directive mainly came into force because of the VAT gap. What we already heard is that it's close to 130 billion in 2019. So tax authorities would like to cover all cross-border transactions where the payee, so money is flowing into the EU and the VAT may be due in the EU. If we look at the background, we already discussed that it's the first one is due on 30 April in 2024. It's a quarterly deadline, so you have to provide the information quarterly. There is a overlap with other items such as DAC 7 and of course the VAT directive, and you need a lot of detailed information. In principle, it covers the payment service providers that are also covered by the PSD2 directive, but it's a little bit more than that. We can see that in the next slide. So it's a credit institutions, payment institutions, etc. No central banks, so those are not covered. And differently than from PSD2, payment service providers that process less than 3 million of payment transactions are also in scope of CSOP. Not in scope of PSD2, but are in scope of CSOP. Please also note that in-house payment service providers are also in scope. So if you are a group that has an internal bank or there's some kind of cash pooling where you have information from external payers, then this may also be covered by CSOP. So in general, these are the transactions that are covered by CSOP. It's all about receivers of more than 25 cross-border payments with an EU IBAN or big number. So this information should be shared with the local authorities. If you look at the information that should be provided, it's the kind of general information that you probably already have from a seller on your platform or a platform that is doing service provides services via you. And again, you need a VAT number because it's all based on tackle the VAT gap. So it's a lot of information to be provided, and it may also mean that you get questions from local tax authorities on these payments. In short, again, scope of CSOP is not always clear-cut. It's quite new. It covers the international payment providers, but also internal payment providers. And there is an overlap with administrative obligations like DAC 7 and the VAT directive. What you should do at the moment already is discuss, of course, with your clients that you need a lot of extra information and do a due diligence on the information if everything is available to do your first filing in 2024. These were the last two items, so DAC 7 and CSOP, all administrative obligations that platforms and payment service providers have to do in future. Will also cover, of course, information that they need from you as a seller, or maybe even you as a user of the platform. Let's go to the last poll. Yeah, I can imagine the answers here because we do not have platforms in the audience yet, and no payment service providers. So the seller or will be an advisor. I have no idea yet. Yeah, that I can imagine. It's kind of new. Not every member state has all rules implemented yet. So it's kind of difficult to understand what the real actions will be. And of course, what will come out of the information that flows to local authorities. And with this last poll, I will hand it over again to Peter. Thank you.
Well, thank you, Rendel and Bart, for these insights. Maybe let's have a look at the questions. So one question that arose: you discussed actions that could be taken in framework of CSOP. What actions do you recommend to platforms having to implement DAC 7? Are there any concrete recommendations that you can make, Rendel?
Yes, you really have to do the due diligence. I said it before. You have to look at the information. Is it readily available in your system? Is your ERP system good? Is the information logical? Does it make sense? Is the VT number correct? You can check that, of course, in VIS. So please do your due diligence. Be ready. And for new users, you should ask them already all information that you should hand over to the local authorities. Because you begin with a clean sheet for the new users. If you look at users, please be aware that platforms will ask you for this information and that you will have to hand over that information, or otherwise the sales via the platform will be stopped by the platform, and the money will probably not be transferred to you. So please be aware of those new rules and hand over that information to the platform.
Okay, great. Thanks. And with that, we can conclude this webinar. I would like to thank you for attending our trilogy, and I hope to be in touch with you soon. Have a nice day. Bye.
Bye.